Hi everyone, we have Hector and Layla here from Universal Loans, and they're here to talk to us about SBA loans. First, love to learn a little bit more about you guys and Universal Loans as well.
Hi everyone, my name is Layla Perdomo. I am the co-founder of Universal Loans and Universal Commercial Loans, a subdivision of Universal Loans. My background is in finance and business development. I am passionate about working with investors and those looking to grow their business and do more with what they have.
Hi, my name is Hector Alvarez. I'm also a co-founder of Universal Loans and Universal Commercial Loans. I've been in real estate going on 30 years, started as an investor, moved into the financing, and now concentrate on really educating consumers as well as real estate professionals on how to utilize commercial and SBA financing to grow their business and portfolios.
Thanks guys. The first question right off the bat then is, what exactly is an SBA loan and how can you use them to scale both your business and rental holdings?
It's actually a great question. SBA loans stand for Small Business Administration. It's a government-backed loan, and what happens is the government backs these loans through preferred lenders. It's designed for small business owners. It's great for business acquisition, franchise purchasing, expansion, and a variety of things. You can even buy real estate with an SBA loan, which most people tend to not know.
How does using an SBA loan differ from using regular conventional bank financing to finance the business and the real estate?
That's another great question because the SBA allows a person, let's say I'm buying this building, as long as I occupy 51% of the building, I can go in with as little as 10% down versus a traditional lender would prefer I go in with a much higher down payment with maybe a 25-30%.
And now, can you buy the property with cash and then get an SBA loan on it afterwards, kind of like that whole BRRRR type of strategy?
There's a strategic way to actually handle that. Unfortunately, the SBA does not allow for actual cash refinances. At the end of the day, any type of refinancing has to go through the standard operating procedures of the SBA, stipulating that in order for them to be able to do a refinance, the rate has to be better, the term has to be better, and whatever the SBA is offering has to be better than what you already have. As a cash purchase, there's no debt being incurred, there's no actual late payments, there's nothing that will hold you from actually continuing with cash, which means that in order for you to do so, it would be best for you to utilize either a private lender, you can utilize a HELOC, you can utilize credit cards, anything that has actual debt, and preferred if it's something that's ballooning, because that means that the SBA is going to come on board and say this is a better term for you. You can actually save money by utilizing the SBA.
Okay, great. And now, what kind of trends do you see with SBA loans now in 2025? Are there certain businesses or types of properties that the SBA is preferring to lend to right now?
Well, as of 3 weeks ago, actually, now that this whole economy is changing on how they're looking at wholesale and distribution, especially manufacturing, and with the new administration really pushing hard for integral manufacturing within the United States, the SBA has now actually increased the amount of money that they're willing to leverage to any business that's going to move into those three types of tiers, meaning if you're manufacturing a product, if you're going to be wholesaling a product, distributing a product. Now, instead of being capped at the $5 million, which is traditional for an SBA 7A loan, now you're able to borrow up to $10 million, allowing you to either expand into a larger capacity or start a new business with more facilitations of being able to acquire larger businesses or either larger facilities to actually do your manufacturing out of.
And how about some common misconceptions you guys see with SBA loans? Because the SBA, it is a government type loan program. So for people who are familiar with FHA loans, there's always that little bit of extra paperwork. So what's the extra paperwork, if there is any, look like on a SBA loan, and what other kind of misconceptions could there be?
So the biggest misconception that I find is that people think that SBA loans take forever, and it really doesn't. It is document heavy, which means you will need a lot of paperwork up front, which is why we like to prepare our clients ahead of time for that. The initial goal with an SBA loan is to obtain what's called a letter of intent. Once you submit the list as required by the SBA, you would have that letter of intent within 48 hours, which is excellent. It's faster than an FHA loan. And we've personally closed SBA loans in as little as 30 days. So it's doable. It's a myth, but it's a myth because I believe people don't prepare well up front. When you prepare well up front, you set yourself up to win, and you know ahead of time what hurdles you may encounter, if any. So it's good to know these things within the first 2-3 days. That way you know what to expect, at least from the initial underwrite point of view.
What do SBA lenders really look for when underwriting these loans for businesses and the real estate? Are there really characteristics that you could see in people where, okay, yeah, the SBA loan would really be a great fit for you?
I feel that everybody should actually utilize it. I mean, at the end of the day, the SBA or even just non-SBA financing is a great way to get into a business perspective of buying and acquiring real estate. Utilizing the SBA, of course, provides you better leverage. You're able to come in with a lot less money, meaning that you're able to utilize that to the capacity of just growing more, being able to actually acquire more real estate. The SBA provides you such more ease as in comparisons to conventional commercial loan, because the SBA looks at the net cash flow of your business, whereas a conventional commercial loan may do the same, but they're going to really put a lot more weight on the real estate itself, whereas a lot of people do what's called a debt service coverage loan, which is a loan that's really heavy on the demand of what the cash flow of the property is. Here we're looking at the cash flow of the business. If the cash flow of the business carries the mortgage, the SBA doesn't even care about the real estate rentals, because that's not what they're looking at. They're really just concentrating on the business, which means that a lot more people could actually jump into buying businesses with real estate while still growing the real estate portfolio, but utilizing the actual component of the business to qualify it and continue their expansion of their portfolios for real estate itself.
So using an SBA loan seems like a great way for a business owner to really scale. So what are, how long does it typically take in an average SBA loan scenario? How long does it take to get approved? And then what tips do you have to get approved faster?
So I'd like to emphasize on the initial paperwork up front. Traditionally, we'd need about 3 years tax returns from the business owner. We don't need the full returns, but we want to know how the business is cash flowing. That's very important when structuring an SBA loan. That determines how quickly we can move things, right? So we want those documents up front. Like I mentioned earlier, it takes, once we have everything that's required, in about 48 hours, we get what's called a letter of intent from the lender directly, which is very powerful. That's just a letter stating we're willing to lend based on these documents. After that, then we go into full underwrite, and that is up to 2 weeks, which is also very fast. But is also something to note. A lot of people are scared of SBA because they think it takes a long time. But as long as things are done in an organized manner with exactly what they need, it's not that long. 2 days to get a letter of intent, and then 2 weeks to underwrite the full loan. Then we're looking to close. We're waiting on appraisal, title, and all the other moving parts that are beyond the scope of initial underwrite.
I just wanted to touch on something, if I may. The 2 days that Leda is speaking of pertaining to the letter of intent, the power behind that is much different than if you went to a loan officer for any commercial or even real estate-based transaction where they give you a pre-approval. The pre-approval is stating, we just checked your documentation and looked at your finances and say you are pre-approved for such and such. When you come to us and you work with our banks and you work with the way that we handle everything, the letter of intent from the bank, meaning sign this, send your earnest money deposit, we have a loan. We're not just pre-approving you, we're starting the loan process immediately upon you having a contract.
Wow, I mean, that's huge with how quickly you can get in then. So now with SBA loans, you typically have to check off all the boxes in order to fit the profile for someone that can get an SBA loan. But do you have a case where someone didn't check off all those boxes and you were still able to get them an SBA loan?
Yeah, we actually had a client that was referred to us by a real estate agent that unfortunately was about to lose his deal. So they had already been on the contract for, I believe, almost 9 months at the time. They had gone to 3 to 4 different lenders, everything from a commercial lender to a non-commercial type of lender. And when we took the loan on, we noticed that the person was actually obtaining the loan specifically to open a business. She was actually looking to open a daycare center. That was her focus. She had already created everything from the business plan, the marketing plan. She had gone for licensing. She had done all of the work as opening her business, not realizing that she could have actually obtained financing specifically for the business to acquire the real estate. So conventionally, she did not qualify because the property was vacant. She was going to be an owner-occupant of 100% of the business. There was no money coming in yet. Commercial does not allow you to utilize projections. That's that's another situation that a lot of people don't realize. If you're going to get a commercial loan, even via financing for the business, they do not allow you to do projections, meaning that startups are very difficult to get any type of financing when it comes commercial, just traditional conventional lending. Whereas SBA allows you to come in and say, okay, based on my strength of my personal financials, based off my marketing plan, the cash flow that we're projecting over the next 3 years, you qualify. So this person came to us very desperately trying to make sure she didn't lose her deposit. She didn't want to lose the location. It was a grayed out location. We provided it to one of our preferred lenders, and we literally got this loan closed in under 30 days, including environmental report and the actual appraisal.
Wow, yeah, that's huge.
So that it happens.
Now, I know that there's a few different SBA loan programs. The major ones are the 7A and the 504. So can you go into a little bit of detail about both and the differences between them?
So the 7A is the more traditional financing that's allowed by the SBA. So the 7A is a loan that is phenomenal because it's a lot easier to obtain than a 504, but it also provides you so much more in the types of financing. Number one, yes, you're able to buy the real estate. The little myth that everybody thinks this is strictly just business financing, you can only get your business financed, is out the window. Everything that has to do from the real estate, if you needed monies for the build out, if you needed monies for equipment, furniture, if you needed monies to buy new vehicles, if you needed inventory as well as working capital, and even at sometimes you're able to get lines of credit for future, let's say for instance, purchase orders or receivables or whatever the case may be. Whereas the 504 is a little bit different in the basis of what they allow you to, but you are able to obtain more money. The 7A caps you at $5 million per industry, which means you can have 10 different NAICS codes, 10 different industries borrow $5 million per industry, whereas the 504, their cap is $10 million. The biggest difference is with the 504, you're only able to obtain monies for the real estate, equipment, and build-outs. So everything else you're not able to. But some banks, if you work with good preferred banks, will allow you to do a mix of both, meaning that you're able to leverage both your 7A and 504 combined. So you're going to be working with a lender for the 7A and for the 504, and then you're going to work what's called a CDC, which is a nonprofit, to obtain the actual remaining balance of the 504 financing.
Do you guys lend in all 50 states?
Yes, the SBA works on the premise of any bank that has the facilitations of doing SBA can do nationwide. So as long as you're working with the right banks, we can do this loan anywhere in the country.
Yeah, really incredible stuff to really, help someone get their business up to the next level and really expand. So for an SBA loan, what are the down payment requirements for them usually?
So it's typically 10% down, but we've gone as far as 100% financing. And I'll share a most recent example. We have a doctor who is buying an anesthesia location, and due to a combination of their credit, the financials, and what the income would be, the projections, we were able to obtain a letter of intent for 100% financing. And we've had several other instances like that. So 10% to 100%.
Now, typically, how many units, what's the max amount of units that you can buy in order to qualify for SBA financing?
So SBA financing doesn't traditionally work off units, right? So when I say that is like Leila had mentioned before, 51% occupancy of owner-occupied space within the facilities that you're buying have to be taken up by your business. Meaning that if you buy, let's say for instance, a 4-unit mixed-use property, let's say it has 1 unit downstairs and 3 apartments upstairs, we have to take upon 51% of that total square footage. Now, the square footage also includes the basement, which is storage, the garages, which are not going to be employee parking. So even though you have 3 apartments upstairs, you're capitalizing on that extra space, and now you have full access to 51%, and you qualify. Now, let's move on to even larger developments, because a lot of people say, oh, well, they call us and they say, we want to buy an 8-unit, a 12-unit, we want to buy a 60-unit building. I want the SBA because it allows you to buy at 10%. Yes, the SBA will allow you to buy a building for 10%, but 51% of that space has to be for business. How do we get around that? The business that you're buying now has to have something to do with the service that you're providing the tenants. And I'm not talking about cleaning, I'm not talking about coming in and doing your wash. It has to do an actual service-based business, meaning you're providing them with medical facilities, you're providing them with we're feeding them. Senior housing qualifies for SBA financing, believe it or not. Some of the best financing in the country is now being utilized towards senior housing, which is one of the biggest growing main factors where equity firms are not coming in and acquiring anything that has to do with senior housing. It's a need, it's a huge market. You can buy a facility for senior housing with 10% down, no matter the amount of units, as long as the services are provided to each and every single one of those tenants.
And can you use these SBA loans to start or buy a hotel?
Yes, actually, we're doing one right now, believe it or not. We got the phone call over the weekend where there's a buyer of a hotel in Louisiana that he's going to acquire a 300-key hotel. Traditionally speaking, a lot of lenders do not like to do them, right? Because of course this falls now into the 504 category because you're breaking the $5 million purchase price. But what happens is it depends on the lenders you work with, such as how we handle our packaging. This gentleman is acquiring this business, this actual hotel specifically to provide housing for Hyundai employees because now they're building a facility to manufacture vehicles. So what's happening is the bank is looking at the 3-year lease that they're going to obtain from Hyundai, and they're going to say, we're going to back this because we know you're going to have a 3-year guaranteed lease rate. You're now going to buy this property and is specifically going to be utilized as a business, even though to him it's really a real estate investment. It's actually a business, and the SBA is taking it upon to be able to provide that financing because of it.
Now, when people think SBA, they're mostly thinking businesses, but as you guys discussed, it also involves the real estate as well. So how can realtors benefit from this knowledge to really help them grow their practice?
It's actually the best way to grow their practice because what's happening is a lot of times someone can go up to someone to try to sell a house. That's all they're looking for. Real estate agents, unfortunately, have been trained to specifically look out for someone that's buying a house or selling a house. Those are the only two things they look for. At the end of the day, they could be talking to a doctor, they can be talking to a dental practitioner, they can be talking to even a nurse, believe it or not. These are people that if you have the right conversations and you understand how strong other financial instruments are, it will grow your business. So Layla and I have really been concentrating over the years specifically on training and educating real estate agents to understand the benefit of what an actual SBA loan is. An SBA loan is the entry point, as we call it, to growing real estate portfolios. Because a lot of times, and we've gone through this and we're experiencing this right now, where we have clients who are coming to us that are looking to buy a business, not understanding that they could also buy the real estate, and vice versa. Someone who's coming to us saying, hey, I want to buy this real estate, not understanding they can now capitalize by utilizing the SBA to buy the business. So it works both ways, which means you're opening up the door for growth in your business to make more sales. Not only that, but you're also going to be able to do many more sales with one individual, in contrast to having to go out and chase down 30 different home buyers every single year. You could literally go into a situation where you have one client, which we're currently working with, doing 3 different acquisitions, 3 different businesses, who in turn now gave us to their clientele because they're all business owners. What about like Rohan?
Yeah, that for example is one client where we were approached to help him with a liquor store that he owns. It turns out that yes, we're able to help him with that liquor store, but he has real estate that wasn't being used. We identified that need, and now we're helping him with a franchise in that other real estate that has been owned free and clear for a very long time. Not just that, but remember guys, business owners have friends who are business owners. Out of those 2 loans, it turned into 7 different opportunities because now he's bringing in within his pool of friends other business owners to venture into other businesses, and we are using strictly SBA for all of it. I say this to say because sometimes realtors are speaking with a client because they are trying to purchase a property and they don't really understand that it goes way further than that. For example, with that one client, Rohan, it turned out to be that it wasn't just that liquor store that he was looking for financing. There was so much more.
He actually has properties that he's owned for years, right? He has one particular property down, I believe it's in South Jersey, and it's been free and clear for years. He was trying to open up a Starbucks. He had issues because of the fact that they were having some type of zoning situation where they didn't have the entries that he wanted. So now, based off of that, we've had conversations. He's going to open up a car wash now, utilizing the SBA with 10% down of cash injection to do this. And then on top of that, we're working already with him on 3 different loans, 2 liquor stores. He already owns 2. He's going into 2 more. We're doing a franchise. Now, real estate agents, they're always looking for the means of being able to have a larger client base, right? So they always have to have listings. For instance, listing agents. This is how I portray the franchise world to a listing agent. A listing agent now has the opportunity to go out door knocking and saying, hey, I want to list your property for sale, blah, blah, blah. Okay, great. You can go to businesses and say, I want to sell your business, right? And convert that into a franchise opportunity, or work with franchises that are looking to actually come into the United States or come into your local area. That's your seller, believe it or not. Okay, so you now have a franchise. What does that mean? Okay, great. Now you go out and you find buyers for the seller. You're selling that franchise. Now they can go out and buy the real estate. You get them the real estate. Now you got the franchise in there. That person now, it became a client that in 2 to 3 years, or actually even sooner, because we've had clients that opened up a laundromat and in 6 months called us back. I want to open up. Actually, yes, within the same time period. One opened up 10 months ago. The other one opened up 6 months ago. And they both called us up within the last 2 weeks. We want to open up the second one.
Actively searching.
So what happens is when you get into the focus of concentrating on businesses, it changes everything because you're no longer stuck on having to say, well, I got to find a listing or I have to buy or find a buyer. You can do both with working with franchises. I've told people door knocking is the best thing. Change the mindset from going house to house, go from business to business. The thing that's going to change is the person you're talking to at the business is 50 times smarter, more educated, more on fire. They're hungry. They want to keep growing and they want to have an opportunity to say, how do I open up another location? You show them how to open up another location with the real estate, you have customers for life.
I also want to reroute it back to the realtors. You guys know, realtors listening, that your clients reach out to you for literally everything, even things that you don't do like plumbing and other miscellaneous stuff. Imagine when they know that you can offer all of this as well. Their minds are going to be blown, especially the ones that are business owners or business oriented. You are already a big asset. You're going to become an even bigger asset once you understand these moving parts that can align with what you're already doing.
We've trained hundreds of agents to do this already. Like we actually do lunch and learns 20, 30, 40 at a time. We'll do a seminar. And the most captive audience is an audience that is hungry, that wants to make a sale, that wants to make money. In an economy such as now where there's no inventory, where everybody's waiting for something to happen, go out and make your own business by going after the business that nobody even knows exists. And that's going to change everything for everyone.
Yeah, no, I mean, that's, I think, perfect for agents. You guys gave like a great explainer of everything. I don't even have anything to add there. Yeah, you guys obviously are the experts on SBA loans and lending, well, commercial lending as well, right?
Oh yeah, we use both. I tell people, so for instance, like I tell a lot of people, hey, jump into the SBA, get into commercial finance, just traditional, conventional. Similar to what a lot of people used to do, which is not the best thing to do. I don't suggest it, is jumping into an FHA loan as an investment, then refinancing it later and continue. Can't do that. That's literally not. The SBA is different because the SBA only concentrates on the business. They don't care about the real estate. So you could literally jump into a property with an SBA loan. And I've told this to many people, sell the business, pay off your debt with the SBA. Now you still own the real estate, refinance that into a conventional loan, use the SBA again, and just keep going and growing your business.
Awesome. So I'm sure after watching this, there's a lot of people that want to find out more about SBA loans and possibly using them for their business. So how can people get a hold of you and, you know, on socials, your website?
Well, we can always get in touch with us through our website. It's www.universalloans.net. I am Finance Chic on Instagram, and we have Universal Loans on Instagram, and Hector Alvarez on Instagram.
All right, Hector and Layla, thank you guys so much for coming in. This was really informative. Like I learned a whole lot on this, so thank you again.
Thank you.
Thank you.
And cut. All right.